Hello and welcome. You're watching Business Today Television. I'm Tanya Aneja, and this is a brand new episode of Technical Gupshup, a show where we'll discuss the technical market outlook, key levels to watch out for, and top technical stock ideas that you can bet on at this point in time. Well, what a week it was for the Indian market. Sensex hit a 3-month high to settle at 61,749 odd levels on Thursday, and Nifty 50 also hit a 4-month high. Sustained FII buying of 10,900 crore rupees during the last 6 trading sessions, aided by appreciating rupee and India's improving macros, supported the rally. However, the Indian markets opened with deep cuts on Friday amid a sell-off in HDFC Twins and unfavorable global cues. So now it is important to understand where the markets are headed in the near term, which are the sectors that are going to perform well, and what are the levels you should watch out for. And to discuss this and much more, let's welcome our guest on the show today. We have with us Mr. Milind Vaishnav, a technical analyst and founder of Gemstone Equity Research. Thank you so much, Mr. Vaishnav, for taking the time out and joining us here on Business Today Television.
Well, good morning, Tanya.
So let me begin by asking you about your technical market outlook. I mean, we have seen a significant rally on the Nifty. Bulls were back in action on Thursday, but we are seeing some profit booking in Friday's trading session. So what do the technical charts now suggest for the Indian markets? I mean, are we in for more gains in the month of May, or are you looking at selling and going away?
Well, it's an old saying that you must sell in May and go away. But let us look at markets in with a little different perspective. I have been mentioning over the last couple of months in our regular interaction with the clients and in our newsletters that there are two things I'm not comfortable with. One is the overextended nature of the technical charts, just per se. I mean, if you look at the charts in isolation, you will find them a little overextended from a technical perspective. And the most important thing is that VIX, that is the volatility gauge, has not only violated the 2021 lows, but it has also tested the 2020 lows, which were the pre-pandemic lows. I mean, it had closed below 11, I think, just 2-3 days back at 10.95. And the persistently low level of VIX has been associated with some of the major market tops. So I feel that this heightened complacency of the market participants, which has resulted into low VIX, has left the markets quite vulnerable to sharp profit-taking bouts. And I feel that the yesterday's high point, that is 18,267, and if we round it off to 18,300, that is something as an intermediate top for the market. And I feel that so long as these levels are not taken out, we will not see any runaway up move in the Nifty at least.
Okay, absolutely. So that's the word coming in. But also, Mr. Vaishnav, HDFC Twins are also in focus in Friday's trading session. So shares of HDFC Bank and HDFC Limited actually tanked up to 6% in Friday's trading session amid a report suggesting the merged HDFC entity could see $150 to $200 million in outflows, as the index aggregator MSCI said that it will use an adjustment factor of 0.5 to compute HDFC merged company weightage. So what are your thoughts on this particular development and on HDFC Twins, and what do the technical charts suggest for these two stocks?
In fact, prior to today's downtake, both of the charts had shown a technical breakout on the charts. So, if we talk about HDFC Twins, I see, as you very rightly mentioned, that all it will see would be just an incremental outflow of. In fact, it will not see any incremental inflow, but a net outflow of around 200 million. But that put aside, both HDFC and HDFC Twins, they both qualify to be accumulated with each such downside. So any investors who have an investment horizon of around 2 to 3 years can continue accumulating both of the stocks.
Okay, absolutely. So that's the word coming in on HDFC Twins. And let's talk about FMCG stocks as well. I mean, the earnings season has been quite mixed for these stocks. So Nestle reported a great set of numbers. HUL was a bit tepid, and Dabur was also again disappointed. So how should one approach the FMCG pack at this point in time? And any stocks that you like from this particular space?
When we talk about FMCG, I will talk about FMCG and the consumption index, both hand in hand.
Right.
And both of these indexes, I mean, Nifty FMCG is lying into the leading quadrant of the relative rotation graph, and and the consumption index is rotating very firmly inside the improving quadrant. So this means that their relative momentum against the broader markets is improving, and we will see this both of these indexes, FMCG and consumption, doing well because they are being traditionally a defensive pack. And looking at the overall nature of the markets, the technical nature of the markets, where we are seeing some imminent consolidation, some imminent corrective move, we will see these packs doing relatively better. I mean, they will decline with the market decline, of course, but they are likely to stay very resilient, and it can give us very resilient and relatively better performance than the broader markets. And so far as sticking to the stock goes, I would be sticking to some of the names from this FMCG consumption would be Hindustan Lever, Tata Consumer, Godrej Consumer Products, and ITC. These are the four stocks that I will be looking at from this pack.
Okay, absolutely. So that's the word coming in on FMCG. But if we talk about top technical ideas, before coming to that, any sectors that you like, especially at this point in time, and any sectors that are looking good on technical charts, and any sectors that you are bullish on?
See, rather than sectors or stocks, we must be highly selective while approaching the markets. We should be sticking to the stocks and sectors which have not done well with this up move. Those who are in the downtrend and now showing some signs of trend reversals. Those sectors who are low beta and defensive in nature, and those sectors and stocks which have got improving relative strengths. So unless we follow these criteria while making new purchases, we will be little, vulnerable in the market. So we have to follow this kind of rules while picking up stocks. And if we apply this prerequisites while selecting the stock, I would stick to naturally defensive sectors like consumer staples, consumer, FMCG, IT. I will still stick to IT. Low beta and defensive sectors like PSE, public sector enterprises, certain mid cap pharma, and all this stuff is likely to do well over the coming days. If not do well, but they will certainly remain quite resilient to the market vulnerability.
Okay, absolutely. So these are the sectors coming in. Keep an eye on that. And now let's come to the top technical stock ideas. So which are the stocks that you are betting on today?
There are three stocks that I'm looking at. One is BDL, that is Bharat Dynamics. It's looking at a wonderful double top breakout above 1045. So the stock can be bought at 1040 or 1045 with a target of 1225 and stop loss of 950. The second stock I'm looking at is Craftsman Automation. There is a development of a wonderful bullish ascending triangle. So Craftsman can be bought above 3230 with a target of 3550 and stop loss of 3100. And the third I'm looking at is India Cements, a case of a minor reversal of trend. It can be bought above 190 with a target of 214 and stop loss of 178.
Okay, absolutely. So Bharat Dynamics, Craftsman Automation, and India Cements. These are the three technical stock ideas that are coming in from Mr. Vaishnav on that wonderful note. Thank you so much, Mr. Vaishnav, for taking the time out and sharing these stock ideas with us here on Business Today Television Today.
If you like the video, do like, comment, share and subscribe.